I get to do my favorite thing, which is the State of Enterprise Digital Asset Adoption keynote, where we're talking about, it's kind of like really where are we in terms of enterprises actually adopting digital assets. This year, we made a very slight change to it because you can't have anything in 2025 that doesn't have the word AI in it. And for what it's worth, this is as good as any. It's AI and enterprise digital asset adoption. We phrase it that way because it's not just enterprises that are adopting digital assets these days. It's AI that is adopting digital assets. That'll be a major talking point all throughout the day. It's a very exciting time where agents are going to start using crypto. You'll be seeing the world over the next couple years will be very, very different. It's going to be scary, for sure, but it's going to be pretty incredible. The way we always do this is we start with the macro. We're going to start with the macro trends that are impacting crypto. Start with the scale out, the zoom out view, and then we'll dive into the actual different micro trends that are kind of happening here. First and foremost, it would be, you could not say that enterprises are not adopting digital assets. I think this is across the board obvious at this point. Stable coins have been the absolute hard driver here, zero doubt about this. The day that, there was a report a couple months ago that Walmart and Amazon were both looking at stablecoin projects and working actively on them, the day someone like Walmart starts getting into crypto, it's for real. We're not messing around anymore. That's when things get serious, because that's a, enormous company that is incredibly conservative in terms of financial operations, that's looking to get the benefits of stable coins, earn the money off of the yield, everything that we believe in around stable coins. So the macro drivers here is that it says 69%. I think that's low, to be honest. We're going to see 100% of Fortune 500 companies touching crypto and stable coins over the next 12 months. There is such a hard driver. A lot of that comes, to be honest, does come from the top. There's never been more regulatory clarity around crypto. So the pieces in here, we have the Genius Act, which is talking about stablecoins. We'll get back to that, and we'll come back to that a few times today. MiCA in the EU, that it has its foibles, but still, it's regulatory clarity. There's this great quote from the SEC, which the SEC chair saying something nice about crypto is I don't know. There's no analogy to it. It's just too weird. A commission-wide initiative to modernize securities and move everything on chain. I mean, it is incredible having that kind of support. You have to think about regulations in kind of two levels. You have congressional legislation, and then you have the bureaucrats that actually do the work. And those are the two levels of the regulators. And what's happened is for a long time we had tepid support from regulators, the actual legislators themselves, maybe liked it, maybe didn't. We started to see that come around. But really, the biggest change over the last 12 months has been the actual regulators and the actual bureaucrats, the folks who are doing the things actual verifying ETFs and letting ETFs go through, all that kind of stuff. That has been the absolute biggest change. The SEC is so much friendlier. The SEC line people, the people who are doing the work and actually approving ETFs, are so much friendlier to crypto than they ever have been. The CFTC, that has its own set of things. It doesn't exist too much anymore, but it's without people, it's very friendly to crypto. You have a lot of these different movements, a lot of the actual regulators are a lot friendlier to crypto than they ever were. And that's very top down in the current administration, so there's a ton of support there. ETFs everyone and their brother has an ETF now. This is just going to keep happening. The next thing on the horizon is obviously going to be ETFs that have staking rewards as part of it. So what you see now are ETFs for blue chip crypto like ETH and Bitcoin. Soon you're going to see Solana and all those, but then soon you're going to see ETH with staking. So it's ETFs actually earn a little bit of a yield on top of it. We'll be talking about DATs today, and we're in this funny period right now where we're not quite to ETFs that can do everything you would possibly want, but we still have people who have that demand, and so DATs are kind of filling that space, and we'll talk about more. $4 trillion. Citibank thinks that there will be $4 trillion of stablecoins issued by 2030. That becomes a percentage of M2 monetary supply. I mean, M2 monetary supply is $160 trillion in the world, something like that. So this is getting to be a real percentage of it. And I think that's always been the joke. Crypto right now is sitting at a, $4 to $6 trillion market cap. So it's good, it's fun, we're all having a good time here, but that's just $4 trillion of pure stablecoins coming on chain is a huge piece. Genius Act, we're all happy about it. It was great to get some clarity here. I will say that a lot of us in the industry are not thrilled about some of the really interesting carve-outs. So the Genius Act essentially made it legal to have stable coins, and it put it under the OCC's control, which I think was where everyone expects it to go. If you're holding a bunch of money as a deposit and you have a circulation, that feels like a bank, and there was different pros there. The Genius Act carved out yield-bearing stablecoins. Like the number one thing I love in the entire world is yield-bearing stablecoins. There is this world that like where I'm paying my bills and I earn interest up until the second that I send my money to my whatever I'm paying. What am I don't know, buying shoes. And then my shoe seller, my street shoe seller, they get the interest from that moment going forward. Like this is the world, this is a frictionless world that is amazing. We are all waiting for that. And the Genius Act did not move forward. So I think the thing to take away from that is there's different ways you can interpret it. And like you could be upset, not like, it's that the banks are not dead. Like there's still a tiny bit of rent seeking out there from the banks, like just a little bit. Like they're still out there. They still have their lobbyists. They were still able to just sneak this little tiny thing in that meant that banks are still the only people that like get to do that interest, and it was just a little bit more rent seeking. But at the end of the day, the yield-bearing stablecoins are all over the place. So like there's an inevitability to this. It's just how fast the banks can kind of like get out of it. So let's drill into these things. So DATs. DATs are the new hotness. Payments was the hotness for all of 6 months, but DATs are the new hotness. If you're not familiar with DATs, MicroStrategy is the classic DAT. It is a public company that is, MicroStrategy ostensibly does other stuff. They have a software arm and things like that. But at the end of the day, at this point, they are mostly just a holder of crypto in a public company. It smells a lot like this weird interim piece right now because it smells like a hedge fund. It smells like a VC, like a liquidity fund at a VC. It smells like an ETF. It's this thing that exists right now because you can't really do a ETF that has a strategy where you take your Solana and you ape into whatever, NFTs or something as part of it. And so they're filling this need in the market for yield that's above what you get from an ETF in Solana. It's going to be below what you're going to have from like a liquidity fund at a VC. It'll be like right in that kind of sweet spot. But I will say, this is like, if I may take a very slight diversion here, I just like, crypto drives me nuts sometimes because like we had found it. Like we had found the killer use case for crypto payments, stable coins. Like this is the stuff that is going to take crypto to be $1 trillion, around the world, everything happening. And then like crypto's like, oh yeah, payments, that's cool. What about DATs? And like 6 months later, everyone's like, no one's talking about the stuff that actually matters. No one's talking about the killer use case that we found. Everyone's talking about DATs. Whatever. It's crypto. I've been doing this for like 10 years. I'm like, at this point, like whatever. Stable coins are I don't need to tell you guys, like stable coins are obviously the thing that's happening right now. It is the future. It's how we're going to be spending money. But what I will talk about a little bit is the balkanization of stablecoins. So what's happened is that like stablecoins are such a amazing business. Like the idea that you're going to give me $10, I'm going to give you back a thing on the blockchain that cost me nothing to mint and it cost me nothing to operate. And I'm going to take your $10, I'm going to go get 4% interest on it in the current like interest rate. Like that is that's an amazing business model. And so everyone and their brother is going and starting up a stable coin right now. So you have Amazon that had an announcement, Walmart, you have Stripe and Societe Generale and Fiserv and Cloudflare even did a stable coin all around agentic payments. That's amazing, but it harkens, for me, it harkens back. There was a time in American currency in like the late 1800s, early 1900s, before we had a well-defined mint process, and the US was actually minting their own paper currency, where a bunch of different banks were doing different types of paper currency. And you had this really weird thing where like, the California Gold Miners Association Bank, you would get a paper, piece of currency from there, but you really couldn't use that over in the Naval Bank of Annapolis over on the East Coast. So you end up in a situation where you had banks that you had a representation of it, but you really couldn't always freely trade it. So like not everyone would take the same banknotes, not everyone would allow you to deposit it. You had this kind of like weird thing. We're back to that. And I think the way that I sort of think about this is it's good because there's just an inevitability about everyone having stablecoins. There's another part about this that's like that annoys me as a deep crypto person, which is to say that like crypto fundamentally is about removing middlemen, right? Like crypto is fundamentally about finding ways to remove middlemen. Like you take the banks out of moving money, that's removing a middleman, that's you get all the value, you get all this kind of stuff. As soon as you start adding friction back, you're adding middlemen back. So as soon as Bank of America launches their stablecoin, and Bank of America says, well, I'm not going to take Wells Fargo stablecoin, like screw those guys. And so now you have to go through a middleman to get your Wells Fargo stablecoin into your Bank of America stablecoin, and they're going to charge you. It'll be this decreasing amount. It'll be 5 bips, 3 bips. So, but it's kind of this last gasp of of finding the friction in the system and finding the middlemen and stuff like that. So it's part of the kind of like, it's great that we're seeing everyone going their stable coins, but it's terrible because it's gonna add friction, it's gonna like change it. And then eventually you'll end up in a place where like, okay, Bank of America will take the Wells Fargo stable coin, but like you won't earn yield on it. So you have to have a Bank of America stable coin deposited in Bank of America, and then you'll earn your 4%, 5% yield. Your Wells Fargo stable coin can sit there, but you won't earn any yield on it. So you'll have like very incentivized to swap into other things and all that kind of stuff. Everyone's getting into payments. I mean, like we'll talk more, but like Visa, MasterCard, these guys all have an existential threat of stable coins. So they are obviously very interested in what actually happens here. So all these guys are getting into it. Even like the Brexes of the world, like everyone deals. I don't think there's a single company that's not looking seriously at stable coins. And the volume's incredible. I mean, like I still like, I swear to God that we fact checked this slide because I didn't believe it. Like we're saying that the stablecoin flow is going to surpass Visa and MasterCard at $27 trillion of transfer. So that's not the number of issuance, that's the actual like monetary, that would be a comparable like M2 flow or something like that, but that is the flow that's happening within the ecosystem. Again, I swear to God we fact checked it. Now I don't know if CryptoSlate fact checked it. Maybe that is where the whole process breaks down here. But anyways, I swear to God, we did look this up, and this is what they're saying. Okay, let's talk about AI. Look, I mean, I don't think, like last year when we had this conference, I don't think we mentioned AI. I think even last year, I will say, I was a bit of a skeptic, AI skeptic last year. So this time last year was like November, or like October, September last year. I have never seen anything change in technology the way that AI has changed the world over the last 12 months. I mean, it's incredible. And so we as a group can have a little therapy session here. I mean, I think there is this part that there's not a single person in this room working in finance or accounting whose job is not going to change. Now, that doesn't mean you're all going to lose your jobs. There's this some like SF tech company is doing an ad on Chestnut here that's like, it's like, I'm an AI that can do your job. I hope you like unemployment. Like, it's like, all right. So no one ever said SF startups were tactful or, but it's not wrong. I mean, look, everyone's job's going to change. Like the amount of resources you're expected to, the amount you're expected to do with the amount of resources you're expected to do it with is obviously going to change. Now, I will say that crypto folks are probably in one of the best situations ever. Like I joke about this all the time, that we have, our biggest customer does 10 billion transactions a year, and they have 3 people on their finance team. Like that is not weird for crypto. That is not normal for the rest of the world. Like if Walmart's doing 1 billion transactions of the year, they have 1,000 person finance team. We have folks doing 10 billion and they got 3 people. So there is this world that like crypto folks, like the folks in this room, like we do tend to think a lot about how do you optimize, how do you move faster, how do you do this stuff at better scale. So that's great. But look, a lot of the day-to-day stuff, bookkeeping, that's gone. Like if your business is monetizing if you have an outsourced team that you monetize at 10x, like that's kind of going to be going away here pretty quickly. The idea of preparing reports, all that stuff's going to go away and get kicked over to the AI. There's going to be an expectation that you are AI enabling your workflow, so that you are being more efficient, that your costs are coming down, that you are giving your clients, if you're an outsourced accountant, you're giving your clients the ability to actually do their own reporting, to ask their own questions of their data. Like this is the expectation that's happening, and like we can all, this is like, it's classic. Like we can all pretend like all of our jobs are not drastically changing, or we can look at the places that we actually can. So we have 2 different panels today, all talking about how our jobs in the finance world are changing over the next few months about this. The other piece though, and this is a lot more fun, is that the AI rail, crypto is really the rail for AI. So like crypto, no one is giving their agent a credit card and like letting it just go out and do whatever the hell it wants. Like not only is that probably illegal, but also it's just not that smart to give your credit card to your agent. And so the first times that people are spending money, we already are seeing this. Like Cloudflare investing in this is incredible. Like they are getting serious about a stablecoin offering because they have a web application firewall that fronts your APIs that you can then charge for on that. Agents are going to be spending money. I'm going to give my agent a $10 budget to help me plan a trip to I don't know, where do you guys want? Florence. I love Florence. And it's going to go and it's going to talk to an agent that's in Florence, and it's going to pay it a couple dollars to get some feedback on restaurants. It's going to talk to my travel agent. It's going to pay the $20 to get that. Like, agents can be doing this and be using stablecoins to transact in this. What that means is that what everyone here is used to, which is this incredible amount of absolutely nonsense transactions that you have to make sense of on a monthly basis, it's not just going to be you guys anymore. Like, there's this kind of part of it that, like, your friends who are accountants in, CPG industries and stuff like that are saying, be like, hey, Bob, my CTO did something and I have 10,000 stablecoin transactions. What the hell do I do with this? So you guys are like, we are in a great position here because we're all used to this like absolute chaos that is accounting and like finance around crypto. But this is leaking out of crypto. Like, this is not a thing that's just going to live in crypto anymore. Every single industry that has anyone at that company that uses an agent, which will be all of them, are going to start to see transaction volumes go up. They're going to start to see, and obviously, there's going to be a lot of infrastructure work to make it so that those transactions are actually accountable and all that kind of stuff. So we are in a good place because we can actually handle that between Bitwave and our wonderful partners and everyone here. Like, we can do it. All right, we'll start wrapping it up here. NFTs are dead. Long live the ape. NFTs never found their killer use case, I think is a really good way to say it. That they, I think we love it. There's art, there's all these different use cases. They never found their killer use case. And I'll say, like, the case in point there would be tickets. Like, there was an absolutely killer use case for NFTs around like concert tickets, and that never really took off. And I think there's a lot of different reasons for that, and that's not to say that it never will, but like the killer use cases for NFTs really never hit because of entrenchment and rent seeking, all the different stuff that kind of like changes that. Yeah, but also a little bit good riddance. But whereas NFTs are dead, RWAs are very alive. Like, and honestly, what's cool about this is a lot of the work that went into NFTs, like a lot of the core protocol work, the different ERCs and all that kind of stuff that like enabled NFTs is now being transferred over to talk about like derivatives and options and on-chain contracts and RWAs. So it's not like that was a complete waste of time. It was just a little bit of a different kind of time. So right now there is so much money flowing into tokenization and RWAs. It's incredible. We're pretty involved in the Canton ecosystem and the Ripple ecosystem. Canton, someone announced $4 trillion of assets getting tokenized on Canton. You see this happening on Ripple with RLUSD and things like that. This is the killer use case for crypto. And it's funny because I'll talk a little bit like, predictions, but these use cases, these are not retail use cases. And these aren't even like, these are like very developer-focused use cases. Like if you're building software that's doing repos and stuff like that, that's a very developer, trader-centric. These are very like high-level use cases by sophisticated professionals. So it's a totally different world. Citi here thinks 10% global market turnover tokenized by 2030. If that happened, I mean, the amount of like assets that are traded is 100x like the amount of money in the world, or 1,000x the amount of money in the world. So that would be incredible. You guys might have seen Robinhood at ECC this year announcing that they were taking all of the stocks that you're trading in Europe and putting them onto an L2 so you can have them tokenized there. It was a permissioned L2, but still, this is pretty exciting. All right, let's talk about M&A because, look at M&A is obviously happening right now, M&A and IPO. So congratulations to BitGo. I think we might even have a few BitGo people here, but BitGo is just filed for their IPO. That's amazing. Circle had a tremendous IPO, bullish, figure. The way that I sort of think about this is it's cool. Look, everyone loves money, so that's the fun part about it. Really, this is, you only get to go public when there's enough sentiment that can support you going public. Like, you can go public whenever, but like you don't have a big pop like Circle unless there is a lot of people that are believing in the underlying theories and technology and everything that's happening. So that's the fun part about something like Circle going public and having that big pop, is it shows that institutions and the people that make bets and the people that like pride themselves on being able to look forward and see what's going to happen are thinking that someone like Circle is a real thing, that this is actually a real thing that's happening. Some great acquisitions. Stripe bought a couple of companies. Ripple bought a lot of stuff here is around the stablecoin infrastructure and orchestration layer, but we'll see a lot. And then Coinbase is just buying everybody these days. So it's been a pretty fun time. All right, we'll start wrapping this up. But my favorite time of the year is we always do a couple of predictions here. So we do a couple of predictions. So first and foremost, I'm gonna keep my intellectual honesty and show you my predictions from last year. So these are our predictions from last year, which is that we will have the betting markets will explode. I don't know if you guys saw that ICE, the New York Stock Exchange parent company, invested $2 billion in Polymarket yesterday. So I came in right under the wire for that one. Although if you guys want this, that was such an easy prediction because at the end of the day, like with the presidential election last year, oh my God, there was just so much money happening in Polymarket. It was incredible. Yield-bearing stablecoins, even though we don't have great support for them in the US, they are absolutely a major part of the entire world, the USG, the USDL, like all the different stablecoins that are out there. The one that I really missed was CBDCs. In fact, I was so wrong about this that not only have we not really seen any CBDCs, we now have like active legislation against CBDCs in the US. So I was pretty wrong about that. And then Web 2.5, this is one of those ones like every year I come up here and I say like the user experience for Web 3 sucks. Every year it continues to be true. It's got a little bit better. Like some of the really specific apps, like Coinbase's app is a little bit better. Like Magic Eden did a cool app. Like it's getting a little bit better, but it's still not there. Like if you're gonna go out and if you want to go buy NFTs on an open marketplace, it's still a pain in the neck to do it. But let's talk about next year. So look, I think by the end of the year, you will be able to go online and buy any stock that you absolutely want. Like this is already kind of happening, but like it will just be absolutely a mad rush to it. So every single stock you want to buy will be available online. You'll be able to trade it 24/7. You'll be able to take your Bored Ape and trade it for your Coca-Cola stock, and that will be a totally normal thing by the end of next year. So by, October of next year. We've seen this move so NASDAQ recently launched 24/5 trading. This is, it's funny, like it made the news, but in our circles, it should have been a bigger deal. Like when NASDAQ actually announced 24/5 trading, that was a direct commentary on crypto. Like there's this thing out there that's gonna allow you to trade whatever you want to trade 24 hours a day, 7 days a week. We as NASDAQ have got to do something. So we saw that, and I think what we'll see is there will probably be select markets. I don't know if it'll be NASDAQ, but there'll be select markets that are 24/7 trading that are public markets. This is my favorite one because I've been talking about supply chain for like literally the last, as long as I can be talking about. With Walmart getting into stablecoins, this is where we see this one get real, to be honest. Like Walmart and Amazon are the two biggest supply chain companies in the entire world, by far, hands down, no questions asked. So those guys, they get into stablecoins because one, they can monetize their customers better, but two, they can start to monetize their vendors. They can just beat the crap out of their vendors even more. And so we're gonna see real supply chain. There's been a couple here and there. There was that IBM Maersk thing. Like there's been some stuff here. We're gonna see it for real. This is finally the year that we're gonna actually have it. And then this was kind of a crowdsourced one from Bitwave, but more Bitcoin and crypto reserves. I think this is going to happen. I mean, certainly the U.S. has $28 billion of crypto on its balance sheet. And I think what you end up in this place where like you get your crypto from statutory action and criminal actions and things like that, and then you end up just holding on to it. And so it's a fun reserve. So I think we'll see a couple more countries actually announce that. And then our product manager, Joe, and I had a big disagreement about this one, but if you see Joe around here, feel free to try to change his mind, but he made me throw this up here, which is that he thinks NFTs will have a huge resurgence in 2026. I think he's crazy, but we'll see where it goes. So that's it, you guys. This is 2025 has been a great year. It'll continue to be an amazing year. We will have so many new transactions. So guys, get ready for the continued growth of digital assets and the continued growth of crypto accounting transactions. Get ready for crypto agents because that's going to be happening. Be aware of the compliance aspects, all that kind of stuff. Don't sleep on tokenization. That's the big one that we're sitting on. And build, partner, but don't wait. Get in on this stuff. All right, you guys, thank you so much. Favorite day, favorite time of the year.